they're like a middleman between colleges and high school. But he put the information in this weekend. I confirmed on Monday. They called me on Tuesday. So it's kind of
What
like
information was
it was just basic information about baseball play and stuff like that. So they're recruiters, but I gotta have a conversation with the guy on the phone. And I'm trying to find a day that I got an interview.
Joe, we're ready for the video update.
Hi, Jesse. Thanks for helping us today. As always, that's Jesse Baker doing our video work. My name is Joe Terril. I'm president of Terril & Company in St. Louis, Missouri. Private wealth managers with just a touch over $500 million in assets under management. Today is February 15th, 2012. We're going to be discussing some of the recent economic news, what has occurred so far in 2012 in the investment markets, and what our outlook is for the balance of 2012. Recent economic news on a worldwide basis has been okay. So far in 2012, we've seen what could be best characterized as a mixed bag of news about retail sales, consumer confidence, employment figures, news coming out of Europe, news coming out of China. We won't discuss every single one of these economic events, but in general, the economic news is not bad. It's what we expect. We are seeing good worldwide economic growth. Yes, Europe is slow. Europe will continue to be slow, but in general, we're continuing to see the trends that we have seen in the last couple of years of good worldwide demand for technology products, for agricultural products, mining products, commodity products, and we expect this to continue. In the world's largest market, which is the United States, we have seen the consumer be a little bit all over the board, but at the end of the day, when you put the information together and look at it, the consumer is spending money. Auto sales are running ahead of what most expectations were. Retail sales, if you factor in the components of the price of gasoline, which tends to dominate retail sales, and you make adjustments for those things, which I believe is proper economic advice, retail sales are fine. The consumer is spending money, and we are seeing the economy continue to grow at a pace that we think by the end of 2012 we're going to see somewhere between 3 and 4% growth in GNP in the United States. We're yet to see any economic figures that discourage us from this. The news on housing is better. The news on employment is better. And we expect this trend to continue. Let me stop again and remind everyone this is not a political comment. I know it's an election year. I want to reiterate with people that we personally, from an economic point of view, believe that all politicians are net negative to economic growth. Their policies tend to be a net negative to economic growth. So we're not trying to make a political comment by pointing out the fact that the worldwide economy is doing okay, and we do think the economy in the United States will continue to grow at a reasonably nice level. Investment markets are off to a pretty good start in 2012, particularly equities around the world. This doesn't surprise us. There are not a lot of logical alternatives for money than to go into equities. Equities are the asset category that is the cheapest right now. They're much cheaper than bonds. They are much better than money market funds or short-term debt instruments that pay nothing. Commodity prices have had pretty good rallies in the last 5, 6, 7 years. You can make the case that they're not cheap. So we continue to be positive on stock prices. We think there is another 7 to 8% move to the upside before the end of 2012. The dividend increases that we're seeing by companies is very encouraging. The amount of cash that these companies are continuing to generate that is either on the balance sheet being used to buy back stock or being used, as I mentioned, to increase dividends is an amazing thing to witness the type of cash generation that we're seeing. So put those things together, it makes stocks a logical attraction right now in the investment climate. We continue to think the US dollar will move lower over the course of the year, and therefore having some exposure to foreign stocks or United States companies that do the majority of their sales outside the United States is a logical investment. We recently have been buying Ford Motor Company, again a company that is generating a tremendous amount of cash, have done a great job of cleaning up their balance sheet, have increased their cash dividend and probably will continue to increase their cash dividend. We like investments of that type, and we also have benefited quite a bit in the last 2 to 3 months from the panic over Europe calming down and some of the lower quality bond issues and bank paper that we felt were selling at way too low of a level 2 or 3 months ago, and we bought a decent amount of it. Those prices have come back up in value now, which has created some nice gains for us, and we think those gains will continue as people begin to realize and finally maybe realize all the banks in the United States are not getting ready to go broke, and they're all not broke right now. It's the exact opposite. Most of the major banks in the United States have excess capital. As a matter of fact, they have too much capital. It's difficult to earn a reasonable rate of return on capital when you have as much as what most of the major banks do on their balance sheet. So we think this is a very good investment and will continue to be a good investment because of the interest rates that we are earning on some of this paper and continue to earn on this paper. So we stay mildly positive on stocks and believe that the corporate earnings that we saw for the December 31st quarter that were reported at the end of January and into the first weeks of February, it's been fine. We haven't seen anything there that discourages us or makes us believe that there's a major problem. The issues in Europe are slowly, as we've continued to say now for a year, and we'll probably be saying this for another year, the issues in Europe will take care of themselves. It doesn't happen in 2 weeks' time. It is a drawn-out process, but it will happen, and it will be a long-term positive for world investment markets. So we remain positive. We're occasionally asked about gold. I believe gold is probably fairly priced in this $1,700 an ounce level. Maybe by the end of the year it might be a little bit cheaper. The only real pending wild card we see out there, of course, is what potentially may happen with Iran and how the rest of the civilized world is going to react to whatever they may or may not do. But I have no way of knowing how to build that in and factor that into which investments we choose or select. So we are optimistic and continue to be optimistic. We're not raging bulls that think we're going to have a runaway bull market with double-digit rates of return, but we continue to think with the central bank accommodation all over the world and with stocks as an asset class where they are right now, they are the investment of choice. We thank you for joining us this evening. Once again, my name is Joe Terril of Terril and Company, Independent Wealth Managers in St. Louis, Missouri. Jesse, thank you for working our cameras and providing the podcast. And we'll be back in about 30 days to give you another update. Thank you. Have a nice evening.
The consensus.
We have August of 04.
7.
That's what I like.
Book to bill was under 1.